what we wanted to accomplish today, Jen, I don't know if you want to give a quick introduction, is just about getting everybody together, I know there's a lot of questions about what's going on because we're seeing kind of mortgage rates going up and now down and then back up. And then also the mortgage deferral and all that kind of stuff. So say what we're doing today and we'll go from there.
I think you just said it, but that's great. We're on with Susan Ashton. She is a mortgage broker, one of our preferred mortgage brokers. And the idea, I think, for us is that we thought we could try and answer a lot of our clients' questions and people who are just out there generally trying to make head or tail of what the right thing to do right now is. So I know for a lot of us, we're talking about mortgage deferrals and how that impacts people. And I don't know if you'd be getting those calls, Susan, but I guess we'd love to hear from you about what you're hearing and what people are asking, I guess, right off the bat.
Yeah, we're hearing, as mortgage brokers, we're hearing a lot from clients. You know, as a mortgage broker, I want to be their first line of defense. I want to be the first person they call. So a lot of my clients have reached out this week. Some of them are just worried about the future. Some are self-employed and they're, you know, they're seeing their business dry up over this. Businesses had to close. So, you know, what we're recommending is, you know, try not to panic. There are programs that are going to be available. We're seeing not just mortgage deferrals, but obviously the government has announced multiple programs to help financially, to help Canadians financially. So we've got GST credits, we've got the Canadian Child Benefit increase, deferral of student loans, we've got 10% wage subsidies for that's for the employers. We also have the the government is calling the Insured Mortgage Protection Program, which is again the payment deferrals. And then we're also seeing a lot of lenders and banks deferring auto loans. So, you know, auto loans are typically very low these last couple of years in terms of interest owing. Some of them are 0% interest. So talk to whoever has your loan and talk about potentially deferring those payments, because when it comes to deferring mortgage payments, it's not free, right? All you're doing is deferring payments to later on after the 6 month or whatever period you're deferring them for. And so instead of your mortgage balance staying the same, it's going to be going up. So it's going to be doing the reverse of what we want it to do. And of course, it's going to be now being paid over a slightly longer period of time. So if you can do without it, then of course, we're suggesting that they do without the payment deferral. But all of the lenders right now, talking to multiple over the last few days, they have been inundated with phone calls. Most of clients that I've been talking to have tried to reach out to lenders, can't even get through on the phone lines. Wow. So I think a lot of people are panicking, and you know, it's kind of like the toilet paper situation. Just everybody just you know, take a breath, give it some time. Yeah, and allow those people who really are in need to get through and have those conversations. If you can wait, then and there are alternatives, then explore those alternatives. I know with the EI support, for example, now it's not only going to be just those employees who've lost jobs, but also people who are self-employed who wouldn't previously qualify for EI. Now there's a program for them as well. So, you know, get your application into EI and work on those things in the interim. You know, this may be a few weeks, this may be a few months, we just don't know. So I would wait until you absolutely have to, until the need is there to defer payments.
Yeah, and so with the deferred payments, from what I'm understanding, your maturity date would just slide back. Is that what you're saying, by repaying on the end? So if your maturity date was August 2025, you'd now be looking at, you know, December 2025 or however long.
Yeah, however long that added interest takes to pay based on your payment schedule. Yeah. And there a lot of Canadians are, and I think this is important, a lot of Canadians have taken advantage of, you know, paying their mortgage faster. And so if you've done that, then that you do have some room, and deferring your payments won't be as big of an impact because you've already paid down some of that interest. But again, now you're kind of going backwards though. You've made all of that, you've done all of that work to pay it down faster, and now you're going to end up back in, a higher mortgage amount rather than a lower mortgage amount. So, but that is good news, because I don't think it's going to be as bad for many Canadians in terms of their mortgage and the interest owing, as some are predicting.
Right.
Yeah.
Good to know.
And this only applies to CMHC insured mortgage or Genworth, like all of them?
Yeah, so CMHC, Genworth, and Canada Guarantee have all announced the same program. They're working together. Although they're competitors in the market, in times like this, they're working together. And so they've all announced the same program. So it used to be a 4-month deferral, and now it's a 6-month deferral. And it applies not just to those people who have an insured mortgage, so originally put less than 20% down, but even those people who put more than 20% down. Many lenders bulk insure their what we call conventional mortgages. And so if that mortgage was bulk insured and sent off to an insurer so they could resell those to other investors on the securitized market and relend that money, then those mortgages are also protected through CMHC, Canada Guarantee, and Genworth. So it is worth calling the lender to find out if they're covered. And then for the small portion of the population, so rental properties, people who have refinanced, especially in the last couple of years, and their mortgage is not insured or wasn't even back-end insured, so we consider those the uninsured mortgages. If they're not, every lender is willing to work with the borrower on a case-by-case basis. And so, and no two situations are the same. So if that applies to you, don't assume that there's no coverage for you just because it's not insured. There are all of the lenders. I've spoken to many of them over the last week, and all of them are willing to help.
Awesome.
Basically, yeah.
We were talking earlier, sorry.
No, go ahead, Jen.
We were talking earlier about the interest rates. And of course, last week, all of our clients were, getting these amazing rates. Interest rates were going down. And I think you were talking today about what's happening and actually the rates are going up. And so for those people who don't know, could you sort of walk us through what is going on with interest rates, and is now a good time to renegotiate, or is it not?
I would say now isn't a bad time, but it depends on what your rate is. So in the last couple of weeks, we've seen rates really come down. It started with the Bank of Canada announcement of the first 50 basis point decrease in the overnight rate. And then we saw it tumble for about the following 10 days. And that was great for people who were able to, who either already had a file in the queue and could, or their mortgage was coming up for renewal and could get those rates. What we started seeing as of Friday is we started seeing the bond market react. And so the bond market, fixed rates are based on the bond market. And so the bond yield was started to go back up. And so it had fallen from a high of over 1.4 down to last week below 0.4. And now it's back up to around the 0.8 mark. And so of course, that means that now we're repricing mortgages based on that bond market, but also because of everything that's going on, there's a lot of risk in the market. So lenders are having to pay risk and liquidity premiums to the investors. And so that increases the cost of lending, right? So they have to pass that on to the borrower themselves. So we are seeing rates go back up. So I would say we're back to a very similar place that we were 2 weeks ago.
Right.
And just jumping in, some people might not know what that rate is. So what is that rate right now? Like where we
well, it depends on whether it's a insured mortgage or a uninsured or conventional mortgage. So I'd say insured mortgages, you're probably looking at anywhere between 244 and I would say 264. A lot of lenders just today, even I've seen a couple lenders go up again to 264. So I would expect we're just going to see that continuing to increase.
Mhm.
If you've got 20% or more down, now it would depend on exactly what your down payment is, but I would say you're probably, just going to open a rate sheet here, you're probably in that kind of 2.89 to 3% range.
Mhm.
Yeah. And then if it's a rental property, obviously those are even more expensive. So
Okay.
So can I ask you a question then? I guess I'm very curious. You probably work with first-time buyers, people who may have been pre-approved.
yeah.
Are you telling them it's time to buy? Jamie and I are sort of getting all of those calls like, is it time to make a decision or should we sit on the fence? I'm just very curious what you're hearing from your clients.
Yeah, I actually just got off the phone before we came online with a client wondering if he should buy or whether he should put it on hold. He's got a property to sell as well. So he's like, and my answer was, well, it's just too early to tell, right? So for those clients that I already have pre-approved, I was able to get them the lowest rate last week on their pre-approvals and extend that back out for 120 days. So they have 4 months. So that's great news. They're not in a rush. They can kind of sit and wait and see what the next few weeks brings, and then get into the market appropriately, you know, and if they're feeling comfortable. So, but for those people who haven't, I wouldn't say rates have gone up substantially. You know, they have gone up, but it's not, you know, we're talking the tune of maybe $30 a month in payments, nothing substantial. So rate certainly shouldn't stop them from getting into the market. It's about how comfortable they are with buying at this point. Yeah. What are you guys seeing in terms of listings and that sort of thing, and activity with Krebs?
With us, I think my impressions are that we've had showings slow down for sure, but where we are actually seeing showings, it's a real buyer. It's a legitimate guy who's out there who has to make a decision. So for some of our clients, we're just sort of changing the expectation of, you know, what's going to happen or what was happening that was normal, maybe 3 to 5 showings a week. Probably unlikely, but if there are going to be showings, it's usually going to be somebody who has to buy or wants to buy. So make the time, make the energy to have your house clean, and if you can find somewhere to be, we are encouraging that for sure. And then for others, they're wanting to sit on the fence and decide, as you say, what's going to happen with the next 2 weeks is going to really impact them or not. And so I think we're seeing a bit of both.
Yeah. Me too.
I have a question, I guess, back to people if they're looking at, and just because I'm similar in a similar boat, when you're looking at refinancing or it's time for mortgage renewal, I guess, and we're looking at rates, because it seems to me that you get better rates if you're insured. So if you're CMHC insured, when your renewal is up, and this is probably something I should have known for a very, very long time. So I'm so happy you're here with us. Is that still considered an insured mortgage for the term of the entire mortgage, or just for the first 5-year term?
No, it's considered an insured mortgage until the mortgage is discharged. So it's discharged upon sale and it's discharged upon a refinance. So if you don't, that would trigger discharge. So as long as the mortgage is not discharged, then it's considered an insured mortgage.
So that would be something super important for people to consider if they are looking at making a change to go to a lower mortgage rate, if they are switching.
Potentially. You know, if their mortgage is insured, then they're going to be offered great rates no matter where they go, and obviously no charge. But for, you know, what we call the insurable market, so those people that had 20% more down and weren't insured, as in they didn't pay the premium to the insurer, then those people still have lots of great options in terms of rates as well, and can typically move with no legal and appraisal fees as well. So just when it comes to a renewal and just switching lenders because their lender is not offering the best option at renewal. So it's not just the insured people. And we are seeing the other great thing is, you know, in 2018, when the new rules came out, we saw quite a big discrepancy between the 3 tiers of rates. So between insured, what we call insurable, which is those people with 20% down, but are following the same guidelines so that the lender can back end insure it, and then uninsurable. And so with, you know, the insured people, they were being offered the best rates, and then the insured, and then insurable, they were kind of the next tier, and uninsured, the highest rates. What we're seeing is that gap between insured and uninsured really decrease over the last couple of years as lenders figure this new norm out with the government regulations and being able to relend that money. They're figuring that out, which is good news for consumers as well. So the discrepancies with some lenders is still quite big, but with others not as much. And the more equity you have, the lower that rate will be, up to, you know, once you get to 35%, I would say you're probably about the same as somebody who had less than 20% down on their purchase and was insured. Rates would be similar.
Excellent. And for yourself, because I know we've talked on and off over the last few weeks, and I know you've kind of been inundated with phone calls and with questions. What are some of those, or what do you find the number one thing is people are reaching out to you about?
How they go about the mortgage deferral, I think, is the most common one. But most are doing it proactively. They're not ready to pull the trigger on it yet. They just wanted to know the process about it. And I think that's really important, that nobody's looking to move today on that. They're just saying, well, we have some time. We want to wait and see. I just want to make sure that I understand the process involved. And of course, the process involved is, I would say, if you have a mortgage broker, talk to your mortgage broker first. But if you don't, if you just went to the lender, then you have to contact that lender directly. Unfortunately, even as a broker, I can't facilitate that on their behalf when it comes to hardship programs like this new program that the government's offering through the insurers. They have to, the client has to talk to the lender directly, explain their situation, explain what's going on, and every situation is unique. The questions they may ask and the information that they would need to provide will be very unique.
Can I ask, I'm thinking about our clients and sort of some of the clients we've had in the last year, and I happen to know some of our sales were hardship cases where they were selling either because they were getting a divorce or they've lost a job.
Mm-hmm.
What if somebody who listed their house actually needed to take advantage of the deferral? How does that impact them when they get a sale?
If they had to take, it would just be, it should not impact their sale at all, because it would just mean that their mortgage amount is higher.
And would it impact a payout of any kind?
No, again, it would be based on the mortgage amount at that time of payout. So I mean, theoretically, if there was a penalty, they may pay a slightly higher penalty because the balance would be slightly higher. But it should not impact that sale at all. Yeah.
Okay. All right.
Yeah. Yeah. And I did, yesterday, somebody reached out because another realtor had mentioned that it may be difficult to move a mortgage if they had deferred. So let's say you did the deferral for 6 months and then your mortgage came up for renewal in a year and you had that extra interest and that increased your amortization. But the answer that I'm getting from lenders is that should not be an issue for most of them, because it will be based on the current amortization. So let's say they started off at a 25-year amortization. Next year they'll be at 20 at their renewal, but their balance is just a little higher than what it would be at 20 years. Their new payments will just be based on a 20-year amortization going forward, so at renewal. So it should not impact their ability to switch to a new lender, or their rate going forward. They should be offered the same
Credit
option.
would be the same thing. It's because it's a hardship thing globally or whatever, the credit's not impacted, I'm assuming.
Well, that's interesting because I would say the answer is we don't know yet. I would hope not, because previously most lenders, if you did go use the hardship program, because it has always existed. If you use that program, some lenders were reporting that as a missed payment on your credit bureau.
Oh,
So,
wow.
and that's why one of the reasons we're cautioning people and saying, look at other alternatives first, because we don't know the answer to that question yet. And if it does look like a missed mortgage payment, then you're going to be stuck with that lender until you pay off that mortgage, or until that, for the 7 years that will appear on your bureau.
Well, and not only that, that's going to be impacting your life with everything else if you get any other loans, right? So I guess that's definitely something you need to ask before you.
Yeah, I agree. I would suspect that that's not going to be the case, because there's just going to be too many people. I'm hoping that this is not, that lenders aren't going to report it that way. That I think the downside is most of those systems are automated reporting to Equifax and TransUnion. So how quickly can they update all that so that they're not reporting missed payments? It would be their back end systems, but I would expect nobody's going to be deferring a payment this week. So hopefully they can get that in line so that they're not reporting that way.
Right.
So I guess I'm curious about one other thing, whether you've seen any of this or not yet, I'm not sure. We have obviously lots of people who are in the process of selling their house, and then have people moving in and taking possession. What's happening with people, let's say during this time, they've sold their house and they move in, but they lose their job? What are the mortgage companies doing with that sort of thing? Or have you experienced it yet?
Yeah, I haven't experienced that yet, but I would say it's case by case basis. So if they remove conditions and possession is within less than 90 days, then most lenders aren't going to be looking at additional, for additional proof of job. Obviously, the getting out of the sale would be, I think, a bigger issue than the mortgage side. If they all of a sudden were like, now we don't want to buy, because now we're scared because one of us has lost our job. But yeah, it's it's a sad situation, obviously, but I would say there's probably no impact, provided they're taking possession in a relatively quick period of time. It's usually outside of that 90 days that we'll have to provide additional employment verification. So the only caveat I would put around that is all lenders, and this is something that most consumers and borrowers don't understand, all lenders do a pre-funding audit. So they will look at the file usually a couple of days before it funds, and just make sure everything's in line. Now, I think it's random for most lenders. So really, in 8 years, I've only had one lender reach out to me a day or two before funding and say, well, we need this. Well, luckily I had it on file and I was able to provide it to them. They actually had it already, but they just didn't look at it. And so we were able to smooth that over without the client ever having known that the audit was done. But there have been situations where they pulled credit and somebody's bought a truck beforehand, or they've asked for an updated job letter because something is way out of date, and in this case they wouldn't be able to get a job letter. So how would that impact the mortgage? I think that the odds are fairly slim that would happen, but it is a possibility.
Okay. I was curious. I was thinking about all of our possessions coming up for the next maybe 3 weeks, and try to babysit them as much as we can, but who knows what's going to happen. So I was very curious from the eyes of the lenders what they were putting in place for people buying right now.
Yeah, I think right now it's a bit early for that. But and I haven't run into it yet, but I've definitely seen on various Facebook pages or groups that I'm part of, the question about what lenders are doing, and it's just, we're waiting to see.
Yeah, I imagine that's something that's exactly what you said. It's going to be the fallout for the next 3 to 4 weeks, as we kind of see how there's probably things that are going to impact us, and things still changing that we're just not, we haven't predicted yet. We still are going to have to roll. I think our industry with real estate, and your industry, especially with the mortgages, are changing faster than any everyday different things. Just like you're seeing things pop up from the news, from the government saying, okay, we're doing this, and things are changing daily. That's happening to us and probably every industry as well. So we're just going to have to deal with it as it kind of rolls out and comes.
Yeah.
I want to just make a mention too to anybody watching, if they do have any questions, feel free to write into the comments and I will be happy to answer them. There's not a ton, but people keep popping in and out. So
yeah. Yeah. And I think, back to Jennifer, what we were talking before, if they've already been approved, so in your case where the possession dates are a few weeks from now, they're not going to have an issue. So, and then anybody else who's, anybody else who's not been approved yet, then they still have some options, right, to maybe not remove their condition, their financing condition. I've seen in one case on one of the Facebook pages, somebody pushed out their condition on financing date a couple weeks just to see, so everybody's kind of looking to try and make things work. And that was the broker that came up with that solution. Just, why don't we just push it out a couple weeks and see what happens?
That's very, very smart.
Smart.
It makes me wonder what builders are doing right now, because I know for a lot of the builder groups that I work for, they're expecting to have rate guarantees for 6 to 10 months while homes are being built, and I'm assuming there's going to be some changes with that at some point. But do they honor? What do they do? Interesting. Interesting. Well, my favorite thing that I've been seeing, I was thinking about our meeting with you last week on Wednesday. I think we had our purchase with improvements meeting.
Oh yeah.
Have you seen how many people are working from home and doing fix-ups at home?
Yeah.
I've seen 5 or 6 people painting their houses right now, and talk about purchase with improvements.
yeah, exactly. Yeah, for sure.
Awesome. Well, I'm also curious, and I know you touched on it a little bit earlier about the rates going back up. I'm also curious if we see the bank cut again, because we're not at zero, right? The US is at zero, but we are not at zero. So there is the potential they could still reduce down to zero. Would we expect to see a drop again, maybe a little dip again, and then rising again depending on bonds? And sorry, the follow-up to that is if it does go down with or without another Bank of Canada cut, what can people do if they see it drop? How can they be proactive? Like, for example, myself, I keep asking questions personally because I'm going to be going through this soon. If I see it drop and I know I'm right about it a renewal and I want to lock in, what's the fastest, best way to jump on that? How do we stay abreast? What's the easiest way to do that?
Right. So to start with, what we think rates are going to do. So if remember that variable rates are based on the Bank of Canada overnight rate, on 2 ways though. So the banks themselves, the lenders, will base their prime rate on that overnight rate. So the first thing is if the Bank of Canada drops their overnight rate, will the banks pass on that full discount? So in the case of this last 2, that was 1%. Would the banks pass on that 1%? So they did this time, or they did for both of those decreases. Would they in the future? And then the other one, when it comes to variable rates, is what are they going to do with their discounts? So their discounts off of prime will probably, if they decrease too much lower, we've already seen those discounts shrink, we're going to see premiums. So instead of prime minus something, you may start seeing prime plus 0.1 or something like that. So that'll happen from the variable side. For those people who already have a variable rate, they'll be sitting pretty because they may have discounts of prime minus 1 or prime minus 1.1. So that'll be great for the interim for them. And how will it impact fixed rates? Well, obviously the Bank of Canada overnight rate is there. They would decrease it to stimulate the economy. And so what we see when they do that is sometimes a reaction one way or the other. It depends on really what's going on in the stock market, I would say. So what we saw with the first decrease 2 weeks ago is the market react and bond yields come down, and we saw fixed rates come down. The subsequent 50 basis point cut that we saw last week, the opposite was happening. And why? Because investors were looking for some guaranteed returns, a safe haven. So they were investing in bonds and not in the stock market. So that's where we started to see the bond yield increase. So, and fixed rates accordingly as well. And then again, I don't suspect we'll see what we saw in that first 10 days, only because now we're getting into that, again, that situation where we've got the risk premiums and liquidity premiums that they're paying to investors to stay invested.
Awesome.
So yeah, and then for those people who are coming up for renewal, I would say get on it at the 120-day mark, because you can lock in a rate with your current lender at 120 days. So either contact your mortgage broker, have a consent on file. If you're with one of the big banks, you have to do it with the big bank directly, but if you're with any of the monoline lenders, you can do it through your mortgage broker. And what I've been doing for what I do for all of my renewals is I get that consent signed, and at 120 days, I go out to the lender and ask them to secure a rate. And then if rates decrease, every time they decrease, I'm going out to that lender and asking them to drop the rate. And if they don't, so some lenders, you know, in the past have only had a 1 rate drop per file, but you know, last year and again this year, when we've seen these drastic changes in rate, they would lose clients if they didn't offer more. So they're willing to drop the rate successively. So just one client, I think we started off at 279 in January, and they're an April 8th, I believe, renewal, 229 is what we were at. Yeah, so for their renewal, and then rates have gone back up. So so we got it at the lowest rate we could, and they're pretty happy about that. So that's what I would say. Anybody who's coming up for renewal, don't wait. There's no benefit to you to waiting. You can always, anything you sign with the lender, you can cancel. Most of them will have a 10-day. This offer is only good for 10 days. So if you don't sign it within those 10 days, it's now null and void. And if rates go up, they can offer you a higher rate. But if rates continue to go down, then we can just ride that. And we still have a lot of opportunity to switch to a new lender should they not be offering the best option for the client.
And that's probably likewise if we're talking to people that are considering buying in July or August, is start paying attention, watch, get in touch with your mortgage professional, make sure that lock in now, and the same thing. So even if you're not planning on actually making that offer come that time, we want to make sure that we're getting you the best rate, because in this very uncertain time, things are kind of all over the place, and having that accessibility and being in constant contact with somebody is super important.
Yeah, and like I said previously about pre-approvals, as rates change, a good mortgage broker is going out and submitting pre-approvals just to make sure we have the lowest rate for the longest period. So as we saw rates drop last 10 days, all of my pre-approvals were resubmitted to access a lower rate, so that now they've got 120 days at that rate. So it gives them lots of flexibility.
Now, is that 120 days included in the possession time, or is it from offer?
No, possession.
Possession. So they have to get that possession date within those 120 days.
Yeah.
Awesome.
That must make you very busy.
They're pretty easy to resubmit, so it's just a matter of staying on top of the rates, which sometimes can be a lot of work.
Well, especially right now, for sure.
Yeah, daily, sometimes multiple times a day.
Wow.
Wow.
Have you ever been through something like this before, with the rates as active as they are?
This is different than last year, but last year we saw rates at their highest that they'd been in probably close to 5 years in January, and then they fell consistently through until summertime and through summer last year. So the same kind of thing, you know, clients coming up for renewal. One lady, I think we started off at 329 and ended up at 259 by the time we secured her, and I think it was 7 rate drops in there for her. So yeah, so the same, it's not atypical to see rates move But last year, like I said, they moved a lot. It was just not what we're seeing now, which is up and down, where last year they were just on the downhill slide for the longest time.
Now, for people that are in those threes or 3.29 or whatever and still have a long time, is it worth them exploring at a 2.5 or whatever we are at right now, or just keeping their eye on it? At what point is that breaking level? They have to reach out to their lender, I'm assuming?
Yeah, or their broker. I always would do the analysis to see if it's worth it for clients. I've had a few reach out this week and say, is it worth it? And so basically we have to, if they're midterm, we have to evaluate whether or not the penalty, and if there's a discount on that penalty, if they stay with the same lender, is going to be made up for by the lower interest rate. And if that's over the remaining part of the term. So if that's not the case, then it may not be the best for them. So it really depends on what their rate is at, their penalty calculations. So again, the big banks versus some of the monoline lenders, you're going to see a lot higher penalties. So in a lot of cases, it's not as worth it. But with rates dropping like they are, if somebody had a really high rate, their interest rate differential calculation, IRD calculation, is probably going to be on the higher side anyway. So they'd need a pretty significant drop in rate as well to make up for it.
Gotcha.
Yeah.
Cool.
Interesting.
Well, that is all my questions. I'm just going to have a peek out here. Jen, do you have any others?
No, I don't think so. I feel like we answered the majority of the questions that are out there. I am very curious, actually, I guess, about one thing. I know you said that there's lots of people trying to reach out to banks about
That is all my questions. I'm just going to have a peek out here. Jen, do you have any others? Sorry, guys.
No, I don't think so. I feel like
Yeah.
my question to you is, for those people who do need to defer and are just in a position where they can't have any other options, how long is it taking for the process to actually work its way through? Because I know I have friends that have made those phone calls, and like you said, they're just jammed at the service end of that. What can people expect if they do absolutely have to take advantage?
I would say you're probably looking at, once you get through, I heard yesterday on one of our Facebook groups, 3.5 hours, somebody was on the phone waiting to get through. And that was somebody who actually got through on the phone, right? And was in the queue. So there's people that aren't even getting through on the queue. And of course, most customer service, I know I've talked to a few lenders, they've extended their hours and people are working overtime to try, and their customer service departments are working overtime to try and answer all of those calls. But it's really going to depend on the lender, what they're asking for, what their process is. I would say you're probably a week at least by the time they can process something. Some may be able to do it a little bit quicker. It'll really depend on their systems and their people and how many people they've got on it and process. But I would prepare for at least a week. So if things are getting tight, and you think the next monthly mortgage payment might be tough, then contact them now. If you're not worried about the next couple and it's 3 or 4 months if this continues, then put it on hold for a couple months.
So is there any way that people can email? I guess that's what I'm wondering, is why, when then it's so jammed, is there not an email queue people can send through, or do you know?
Yeah. Most lenders have email customer service. So you can go online, go to the lender site, and there'll be a customer service email address. I believe, again, I'm not sure that the big banks offer that same kind of service. I think you actually have to speak to somebody at the bank. And of course, your mortgage broker can't help you with the big banks. They want to speak directly to the customer. So we can't help even facilitate that. But every lender you could email. The lady that I spoke to yesterday that was trying to reach a lender and called me instead, and she wasn't even one of my clients. But she called me and said, "Can you find out this information?" Unfortunately, I couldn't because she was with Scotiabank, but I did give her a bunch of information on how to work around getting a hold of Scotiabank. Yeah.
And maybe that's a good off topic for what we were talking about today, but maybe this is a good platform, is for you to kind of explain to people the difference between what you're doing as a mortgage broker versus what the big banks are doing. I think that that's something Jen and I are always telling and informing our clients of, but it's a good platform maybe for you to kind of give us a little rundown and explain that to them.
Yeah, absolutely. So my job as a broker is to work for the client, not the lender. So I'm putting the client's needs and wants above the lender needs and wants. Obviously, we have to comply with, the lender that they end up choosing we have to comply with their policies and their requirements, but I'm always advocating for the client. Whereas if you go to a bank, you've got a bank employee, and that bank employee, they've got a select set of products available in that bank only. And I think a lot of consumers don't really understand the differences even among the big bank products, right? So that's where I'm there to try and educate clients about the differences. And so they're making an educated choice about where they want their mortgage to be, and other choices along the way, whether it comes to down payment, how much should I put down? I may have the money to put more, but should I put less? All of that kind of stuff I can help them with and advise along the way. And of course, for the bulk of consumers, my services are free. So they don't get charged fees directly or indirectly through increased rate by using my services. And oftentimes I can get them a better rate than if they were to walk into that bank on their own. So.
And it's not just the initial mortgage, right? You're refinancing for renewals, a lot of different spaces, depending what you're doing, you can help advise and guide along the way.
Absolutely. And I'm happy to chat with anybody, even if they're not a client, about what's coming up for their renewal. And it doesn't mean that I'm going to advise them to change lenders, because as a broker, we only get paid if they switch lenders. That's not the way that I operate. The way that I operate is always in the best interest of the client. So if their incumbent lender is offering them a great rate, I'm going to be very upfront about that and help them through that process as much as I can, because again, that's just good business and being human.
That makes a huge difference. People, I think, right, are looking for that exactly. Somebody beside them and somebody to be taking their best interest at heart.
Yeah.
I know when I very first signed a mortgage, I had no idea there was anything. Product was really only a rate. And I think a lot of people have that kind of misconception, right? That really all a mortgage is the rate. They don't know that there's different product or what that means, or the penalties or all the different clauses and things like that. And I think that's super important for people to understand. And that's something that Jennifer and I are always instilling on our clients when we're working with them is, make sure you're actually understanding the mortgage product before you're just signing on the line. It's not always just about the rate. So
an offer to purchase isn't just like the purchase price. Often it comes right down to possession date and conditions and all of those things, right? You got to pay all the others.
Right. And I'll have that conversation even about possession date, Jen, because you brought up possession date. Oftentimes lenders have promos for what we call quick closes, and it will be anywhere from 30 to 60-day possession depending on the lender. But, I will say if you want this rate, then you're going to need to take possession in 30 days from time of submission of the mortgage, so or of the application. So again, just having that conversation with the client early on, then they come to the realtor and more informed, right?
That's right.
Yeah.
What do you think are some of the tricky things people should know? Like one of the things we always talk to our clients about it, that honest to God, up until we met you, or I met you, I'm not sure people were aware of what portability was, or how you blend or any of that good stuff. Is that conversations you have with first time buyers, or what is your plan with
I try and keep the conversation with a first-time home buyer as not as simple as possible, but there's so much information, right? There's a lot of information you as realtors are providing. There's a lot of information about the mortgage. So it's a huge learning curve. So I try and give them information as they need the information, and not too much at once, and educate them as we go along. So in that first meeting, my first meeting with the client will be an hour and a half, sometimes 2 hours, depending on the questions that they have, because we're going over so much. So I try not to talk about renewal too much, but touch on what happens in that kind of 6 months prior to renewal. But it will really depend on the client as well, and their questions and their appetite for information, right? So
Perfect.
Sorry.
No, all good. I am good. I think I'm just going to check Facebook real here. Last time I opened it up, it started yelling at me with all the audio and everything, but there's no questions or anything there. So I think we will just leave it unless you guys have anything else you want to ask. And now at least we know how to do this, and we can try again or record a different session in the future, and, just keep our clients really informed. And I think that right now, especially where we're all just kind of stuck in our homes, this is a really good avenue and tool to be able to help educate people a little bit more, so that when they are ready to ultimately do one of those three things, either buy, refinance, or renew, they understand a process or have a little bit more information in their tool belt, and that's super key. So thank you so much for joining us today and helping out.
Well, thanks for asking me. It was a pleasure.
Fun.
Always happy chatting with you.